through something here. So, last time we had talked, this daily trend was super important. This was something that we had um, looked at, and it became pretty clear that this trend was going to do one of two things. It was either going to hold the move up and support a really fast move up, where you were going to see probably some of these pretty crazy levels, like had this trend held. And that was the context and one of the points of that last session, is that if you rewind to that moment where we had this, all of a sudden it became very clear. And this is the great thing about doing TA when you're doing it properly, is because this became very clear that we only have a certain amount of time to move up. Like, we are now on the clock. We've got a daily level. And once that gets lost, you're starting to expose yourself. And this was one of the keys to that trend, is that if you lose that daily level, you're starting to expose yourself to the bigger stuff below. You're not losing a 4 hour trend where you can be offset by another 4 hour, or possibly even a 1 hour origin, or a disconnected 15-minute origin. Like, it opens up a lot of different possibilities when you break down a daily level here. And then you're going for possibly a weekly to offset you, possibly a daily to balance you, even a 4 hour to offset that break of that trend as a plus one, minus one, or even as a disconnect of the 1 hour that just protects the next part of the plus one, minus one. And the disconnect is something we'll get into in the future. But the disconnect, when that happens, it protects the larger time frame. So, like in this example, if we had lost the daily here and an hourly stopped us, that disconnects away from the 4 hour, and that 4 hour can offset the larger range. So, and what I mean by that, and we'll do a formal on this, but for now, what I mean by that is, if you were to lose this daily here, and so this was your offset target, daily to daily. Let's just say this was just a regular red level; it wasn't dotted, and you went to go target that, and there was a 4 hour rate here. Maybe here's a 4 hour and there's a daily, but you stop on an hourly and it disconnects, and you create a new 4 hour here, right? So you have like a 4 hour level right there. To make that clear, what I'm actually going to do is I'm just going to copy this over, because it's a lot of white lines. But then you have a 4 hour level here, and you're like, okay, daily offset to 4, hits the 1 hour, offsets this, hits that 15-minute, goes up here. But when this breaks, the disconnected time frame was just protecting the original attack. So, like, you would say that even you could create a weekly rate here. So even if this had been a weekly, because it sat in a range for 4 weeks, maybe it sat in a range for 4 weeks, and then it ends up doing this and this and this and this, and it's a weekly level, a hold level, because it was like, like that, and then it went up, and it's a weekly hold level, and you lose that weekly hold level, and instantly you would think like, oh, only a weekly can hold us on the bottom, or the daily can offset us. So this is part of the curse of disconnects that people don't see. It's not a bad curse, by the way. It's just when you don't understand it, it can feel very abysmal and very dismaying, because all of a sudden you lose a weekly level, and you get offset by another, like there's a daily here, maybe there's a 4 hour there. And so you get offset by this 4 hour, when really that's just offsetting this daily. So then you're like, oh, I have a weekly level here. It hasn't targeted the daily. It did hit a 4. This 1 hour stopped it. And then you go straight down through the move, because this was all offset originally from this. So it's kind of like it makes it feeling like leaves you with a bit of a lingering feeling of an abysmal confusion, because it's just like, okay, well, what happened? And it leaves you with like questions unanswered. And that's something to be aware of as you go forward. And you're thinking about disconnected levels, and what do they mean? So um, that is something that I think is going to be an important topic in the future, but not so much important for today, but just something to recognize as we're moving. And so, getting back to this trend, like, this really was a great moment, because you finally had a daily trend, and that was, it put us on the clock. And just like we talked about in our last session, it put you on the clock of either you are going to start having this really wingy wild moves up like this. So you're looking for longs, right? You're looking for longs that support the move, or all of a sudden you're going to break down, and you're going to expose the deeper parts of the range that it's going to attack. So if you expose the deeper parts of the range, you can really see what's going on. So one of the valuable insights that we can get from losing this trend is we get to see what part of the range does it test. Does it test an internal and cycle this, therefore creating some kind of new range trends like that? Do we have range trends on top of a more master trend that in itself, this master trend is just really truly a sub part of this master framework down here. So, like, that really exposes, like, what are you doing? Are you going for this time frame? Are you going to the deeper parts of the range? Like, where is this thing really going in this trade, right? So it really is nice to expose that. So let's just kind of walk through this trade and see what happened, because that was kind of the moment where when you lose this trend. And you can see Bitcoin trying to follow suit here, and you can see it trying to hit something. So like I think like a healthy thing to do is to start analyzing like what had happened here. So what would have to hold you up in this moment? So you have 4 hour levels. So you have a 4 hour here, right? So you do have the creation of a 4 hour here. And we're just going to kind of walk through this so we can just kind of pinpoint down the logic flow here. You have a 4 hour there. Does it hit another 4 hour on offset? Yeah, it sure does. 4 hour to 4 hour. Great. So now you're looking at, okay, now we need to gain, this 4 hour level. So that would be like the next part of that flow. So like, just like we walked through the move on the scalp that we did, we're going to walk through this one much the same. So it's like, okay, 4 to 4, awesome. So your next target is here. Target is as rejection. You could go to a 15-minute candle and you could probably see it rejected the target. Target is rejection. So you're seeing 4 hour, 4 hour, rejection is target, right? Rejection is target, rejection is target. Okay, so you have it on the 15, but it's not enough to have it on the 15. You need to have it on the hourly. Okay, cool. You have it on the hourly. What about the 4? Did you actually gain this level? You have to close above it. So I would say you didn't gain it yet. You do have to close above it so that you actually have it as a level, not just go over top of it. So now you're kind of in this scenario where you're going to be working with a 4 hour here, and you're going to be working with 1 hour time frames as well here, right? You've got a bit of a come on. You've got a bit of a I don't want to say like you've got a bit of a situation on your hand, I guess is the best way to say it. You've got a 1 hour here, right? You've got the 1 hour here to gain, and I'm just going to mark all 1 hour possibilities. You've got the 1 hour here you can gain, and you've got this one that you don't want to lose. So you don't want to lose this, you don't want to lose that. This should really all be connected together. So the gaining of this 4 hour is all kind of. Oh, oh, my trading view froze. Hold on. There we go. We're back. The gaining of this 4 hour is all connected into here. So this 4 hour is trying to have its moment where it's either realizing it can move up or not. So let's just kind of walk through this, and you hold that hourly and fine. So now you need to gain this, and we can move that and adapt this as the trade's going on. So now this goes here, that goes there. You've gained that hourly, you've back tested this. Okay, so now you're no longer looking to gain this. You've got the 4 hour here. How has that changed? Do you have anything else? Yes, you do. This 4 hour has now moved up to here. So if that 4 hour is moved up to here, what are you looking at? You're looking at, okay, it's got to gain this one. It's inversing this at first. So you have a reverse here. Next, it has to pass this, but it still has to gain that 4 hour all through and all through. And it breaks down its hourly, tries to gain that, goes for rejection as target. Where's the 4 hour candle here? So it does go for rejection as target, tries to break over it, regains its hourly here. Like it's still struggling to gain this 4 hour, right? You've got the origin here. So now you've got this. Now you've got polarity on the move. Now you've got, are you going to get above this 4 hour, below this 1 hour, or below this 4 hour, right? Now you've got kind of this thing where you're going to see like that is going to be a spot where people start injecting because your 4 hour is now changing, and you go back to your 4 hour handle, and now you're kind of stuck in this moment of here to here. So there's going to be some kind of like, if you were to go to the hourly candles, hour by hour, we're going to go to the next candle here. Is that it yet? No, that's not it yet. So you're trying to gain these 4 hours, and even this as a 1 hour and a 4 hour. Don't gain it. Come back. Have we created any? Because we really need to see where that 4 hour candle gets created. So no, you're not there yet. Another candle should be now. So yes, so now you can get rid of this. You have got this, and you have also got this now if you still continue to close. So you have kind of two levels here, right? So you're just walking through this move and understanding that this is the polarized point, the 4 hour that has to gain these 4 hours, because you're all being offset by this, which was back from here, which is just, kind of completing the cycle. So then you lose that hourly and you start to lose trend. So this should actually just all line up perfectly. Is there any 4 hour levels that can hold you? Not really. Is there any 1 hour levels that can offset that? Because that would be your final moment. As you were doing this up here, your final moment would be, okay, well, what about the 1 hour to offset that? And that's where you get this and why you get it. It's exactly why you get this. So you're holding trend, you're hitting the hourly, you've got the 4. This is all like very much straightforward. You lost the 4 here. This 4 can hold. It can be offset by the 1. So this looks like we're moving up, right? But actually we just don't gain trend. And then that's the collapse of the move. And I don't think you would recover the move from here. I'm pretty sure this would be kind of it. Like polarity was your target here. And this is something to remember too. Like I talk a lot about this as polarity as a target. And if this was polarity on the target because it was offset by all this, that's also where you would get your reentry to the dump. So like if you want to just take all this extra off and you're polarized down and boiled down to this moment, When you hit it, you lose your trend. So that's the first kind of alarm that should be going off in your head. It's like, oh shit, I just lost my trend. Hopefully I can regain it. When you go back to these moments and you see trend gets hit, this is clearly polarity in the move. When you backtest that polarity, you need to start following those trails and you need to start entering your trades on these trails, right? Like you need to just say whatever time frames you have, and it's the hourly, right? So you're gonna have possibly a 15-minute here, right? Right here, you've got a 15-minute. This is actually an hourly as the second touch, but this would have been an okay short too. I suppose this is a good short if you've missed everything else. Like I don't know if it's going to come back up and test this. Yeah, it front runs it just slightly. It might even test it still. Is that hourly polarity, get above it a little bit, back test that trend, and that's fine. So this 15-minute would have also been, something to pay attention to. Get up here, you go here, you kind of just front run the back test of that trend. I'm assuming this is some kind of like regain of some type of level here. Yeah, 4 hour here. And like that was the whole point of this move, was that once you lose this daily trend, this has put a time clock on it. This has told you the end of this Bitcoin run is either coming soon, or we are going to start moving up and the Bitcoin run is real. Like that's what this trend was. And so it played out exactly like that. And you dropped from 73K within hours, 11% down to 10K. Like we haven't seen that kind of pullback on Bitcoin here. We saw it a little bit here, and this was like the first part of the rejection of the move. So, you do see these kinds of pullbacks, but the difference being is this actually broke its trend. It didn't create it. So now you're starting to think about weekly levels and targeting weekly levels. So this was, just rewinding our ideas back to, yeah, and this is nice here because I think if I go forward one more day, you're going to have, oh, we're not there yet. Oh, this is nice because this actually creates clarity on the chart too. So like this is now going to be like a pretty important spot moving forward. It's actually just a break level for now, but if you can't reach this and you start rejecting the break level, like I think the smart short now would be on the daily. Um, if you can manage to snipe an entry on the daily, you're probably going to see like one of two things happen. You're either going to see the daily hit and that's going to confirm the dump, or you're going to see the break and it's going to Pandora's box you again. But the tides have shifted a little bit in Bitcoin when we lost this trend. What was looking like it was just like a big move up. As long as this trend can hold, it starts spiking really fast. What that was a few days ago is now like, if we hold this, Bitcoin is going to dump for real. And it's going to pull back, not just to the base of its range, but it's going to have, a much larger move down than I think that people anticipate. So this is a really, really important moment for Bitcoin. And I'm glad we talked about this in the last session, because seeing it unfold at the all-time high allows you to understand that if this now rejects, you can expect a pretty substantial move down. So this is something that people need to avidly be watching for right now. And it's not like you got held up on polarity and held this 15-minute and cycled the trend. That would have been something I would have been okay with if you had hit this and cycled here on the daily and you were like, okay, we might not quite be done yet. But now, and see, one of the key differences is this opened up the possibility to break the move up. This next piece now opens a possibility to break the entire move down. There was no possibility to break the entire move down before. So at a higher level of doing theory crafting on the charts or meta crafting or whatever terminology you want to use, theory craft, meta crafting, whatever, it doesn't matter. Analyzing the charts to see these larger moves, there's a fundamental shift from a few days ago to today, almost as if spring is here and you can just sense it in the air. Not quite like that, but it's just that fundamental shift has happened to where now, if we do reject something like this, we are going to see the larger purge of Bitcoin. We are going to see the larger move down. And then at the highest level of trading, when you start to say, like, how do you start seeing tops and how do you start calling out these moves? Like, in the past when Bitcoin went to, whatever, 60K. And then I said it was going to drop down to 29.2 multiple times. I had said that the whole time. Like my first target from here was 29x, whatever it was like 29,000 something. And then it was 29.2 here. It was like 29,020. Like that's the type of move that you're setting up. Because if you notice, you're going to be very much in the same kind of momentum here. Like, look, here's the exact same part of the chart. Okay. Here's the exact same thing that happened. All we're doing is changing the level color. Weekly trend, level to reject it. Have the big dump down. That's the same identical thing you're looking at here. It's just starting to happen on a more fractional time frame. Probably go back and see the same thing happen on the less fractional time frame here as well. So like if you were taking this and you had your range that was built here, and so you were to take your daily instead, right? really the only key difference on this chart, the only real difference on this chart is that you had more time at the top of the move, probably because your trend was a lot more. If you start your trend work from down here, and I'm sure you end up with stuff like this where, that gets hit. So that's perfectly fine. And then the rejection, like you're just going to have your trend work. Like your trend work is pretty straightforward here. And then you would end up having like this to this, which would be another fractional piece. And then you'd end up having this to this, which is another fractional piece, right? Like hit that trend, reject the level, pull back. The only difference is because Bitcoin had time to sit at this top for weeks on end. Like how long was this here for? February to April, almost into May. So like 3 to 4 months. We haven't had that same kind of luxury of time here. So you're not going to see those weekly levels like that. That's not going to what's going to show you the move. Like what do you March to March? Like we don't have that same luxury of time. You know what I mean? Like you just don't have it. So actually, if you were to look at the last dump, it's the same setup. So that's why I said like this time frame here, and this is now a weekly time frame with the weekly level, right? Lose the level, reject the trend, move is dead. Lose the level. Oh, sorry, lose the level, reject. Oh, I guess rejecting the trend. I said that wrong. Lose the trend, reject the level. So here, lose the trend, next step, reject the level. So this is really the key moment for Bitcoin. This is the next deciding factor of Bitcoin's future here. So it was a really important moment. And then now engineering trades and moving forward, it's really something we should be paying attention to. And also we did lose a trend and we did hit the level, but we also hit some other stuff in here too. So I wouldn't rule out now, and I would find the highest time frame level that this thing had rejected on. So you've got the hourly here, and that was polarity, and that's fine. This was never polarity here. Oh, was this? Oh, I didn't see that one here. Okay, so you've got an hourly here. So this is important because this is, going to be a 4-hour in level strength. So you just hope that it comes back here. But with that said, you can also engineer now hourly levels. You can also engineer this. And does that line up with that daily? It does. So you might want to start thinking about front running this daily. What's the percentage gap here? 24%, 26%. Yeah, like the problem is if it hits us and pulls back, you miss the trade. We're always faced with, do we deep dive a move or do we front run it? Like it's kind of a weird thing when you think about it, because we've never actually talked about that. We've never actually talked about, hey, here's a level. Where does the definition between when should we deep dive versus when should we front run come in to place? And I think that is very subjective to the move. And I think that is very subjective to, because you're never going to be able to answer that as a blanket statement. Say, hey, we should deep dive this trade due to reason X. You cannot blanket statement this. You have to analyze the move and see what's happening, because in the context of this move, we have a daily that broke. The +1, -1 to that is a 4-hour. A 4-hour level can be found here as polarity, which has already tested actually. So the polarity has already tested. So you actually did get to deep dive this daily into polarity, which means that you didn't test that. So you've technically already kind of tested this. So in my opinion here, the better of the two trades is actually front running this level here, this hourly level here, right here, because you've got the hourly here that deep dove. You've got the, where was it? The daily here. And I marked this wick. This should actually be red. This should not be blue. Might be a little confusing. So you've got a front run daily. You've got the wick body. That level tests. Come on. You've got a measurement of 9% to here. You've got a measurement of 26% to here. So you can achieve the same thing by hitting this level as you can by hitting those, and you're protected all the same. If you were to take this and it deep dives to this, you're liquidated anyways. So what would be the difference between taking this to this? If you were on a true 100% to 100% ratio of liquidation, and it wasn't 60%, somewhere between 58 and 68%, you wouldn't have to worry about it, and you could actually go for the daily level and get covered to this deep dive. And I think the trading would be a lot different if you could do that. But right now we can also just reject this part of the move, and it would look like, oh my God, I missed a trade at front run, but like you really would have missed the +1, -1 that you had The daily got hit. Like if you look at the sequence of events, you lost the daily. This daily did get hit. It deep dove to the 4, and now it can go after the 1. So daily 4-hour 1:15 next. You can wait for this to hit and look at 15 minutes. So this hits, right? This hits. You create 15-minute rejectionist target candle. That 15-minute is there. It starts to bounce it, bounce it. The second it loses it, if you don't want to enter here, you can market enter there, because the reality is you might not come back up and test this 15 at that point. But the 15-minute at least gives you your answer to, if this holds, is it going to break the move? 15-minute candle, rejectionist target. The only bad thing about this that I will say is that, your 15-minute candle can be a massive 15-minute candle, and then you could be forfeiting 2%. So like you have to take your pick here, whether you're trying to play this hourly to offset the daily to the 4 to the 1. The entry below that is a full 1.x down, and then you have to market enter. So assumingly you're 2% less, right? Because the market fees plus on top of that, you might not get perfect entry. It might just instantly dump in a 1-minute candle. You might get, minus 2.5%. You might get lucky and get the retest and just only get minus 2%. But there has to be a decision made here as to what level to buy. And for me, the hourly makes a lot of sense, because it kind of just fills the criteria of everything. Broke the daily, back tested the daily, +1 -1 to the 4, front run the daily by getting to this here, which is your hourly. So then you're just following the logical trail. And if that all executes, like, this thing's gone. You might not even get back up here. It could just dump straight down right now. Like, look, this was the whole thing we just talked about the 15-minute level. Look, it happened on the hourly. So you're like, oh, here's the 4-hour. Let me get it on the hourly when that dumps. So just change everything we just said. Instead of a 15-minute level, pretend I said an hourly level. Let's go take a look. Were you even able to get a chance to get in on that hourly? No, it just went straight down. So now you're sitting here like, oh, do I enter now? So, there is part of this where you forfeit and sacrifice that. And when you see something just dies like this is part of the reason why. In this, we have to go scenario by scenario to explain them all differently, because there are different reasons things dump. But in this scenario, I can promise you that this is what it was. It dumped 5%. This moved down 500% if you 100x this in, what is this? 5, 10, 15, 20, 25, 30, 35 minutes, 5%. That is obnoxiously fast, like abnormally fast. So that's the risk you run when you try to, you're playing against polarity in moves that are rejecting. And these things and this kind of like events that are happening and the way in which they're happening is all starting to show me that this thing is dumping. Now, again, you still have to actually break the range to dump, but this is the setup you're looking for. And this is what we started to engineer and talk about in the last session with this little time eclipse here that got created, this 2 days of either you're up now, bang, 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 or you're moving down. So when it has trouble gaining those 4-hour levels and, all that stuff we worked through a little bit earlier in this, when it has trouble, like, it's going to dump, So like, okay, you didn't get in on the hourly. You didn't get on the 15. Maybe you should have done it on the hourly. Well, you should have gone in before the trend broke when you saw this stuff. And it's all hindsight trading. So like, that's not really relevant or helps us, but it just follows the same line of thinking that once it's too late, it's too late.